All right. Well, thanks, Renee. Thanks. Good morning or early afternoon for those of you in the East Coast. I wanted to jump into it right away and give you a little breakdown of what I plan to go over and what we've been doing for the last 15, 16 years. Two things really I'm going to cover. I got a couple bullet points here, but most importantly, I'm going to show you some unique things that you can be doing both inside of trading and also not only trading but also in businesses or in real estate in a way where you can actually avoid paying taxes altogether. And so this segment, I'm going to talk to you about some things that I've seen. I've seen literally thousands of individuals taking advantage of some of the things that IRS has approved long, long ago for you and I to take advantage of, to be doing the kind of investing we want to be doing, but avoiding the taxes and maximizing, obviously, returns. Then towards the end, I'm also going to have I'm going to review one way that a lot of people are creating a lot of passive income that have some nice security involved that's very consistent. So I'm just going to teach you two things, and at the end I've got a nice gift for everybody that you definitely want to take advantage of, that will change the way you invest and also help you kind of get your feet on the ground as far as diving into this really deeply and making better returns. And so I'm going to jump right into it, if you don't mind, right here. Pass over this probably really quickly as well. Been doing this for over 15 years. I've written a couple books, one Bank on This, another called Flip Bank Live. I'm the owner of a trust company, Horizon Trust Company. I've actively been investing my whole career, mostly in real estate, but also in the stock market and trading, as well as funding different businesses. I'm going to teach you about some of those things today, this morning, for our short time together with this mastermind group we got this Saturday. So probably most important thing is this crew right here. I got the 4 kids, and they are my why. They are the reason why I do what I do. I kind of grew up in an Air Force family, and my dad, after he got out of the Air Force, he moved around a lot, and I decided that I was not going to move around as much, and I wanted to actually create something, a legacy, and an opportunity for me to spend more time with my family. And so that's how I got into this business. And so as I jump into this, I want to go over a couple stats I think that are important to share with you and why this is so important, this subject. And starting with this stat from the Social Security Administration, only really 3 or 4 individuals out of 100 when they turn 65 are prepared for retirement. 3 or 4, that's it. The rest are either broke, they're dead, they're still having to work. Most of them have to work. And so Social Security says that you have to make $3,500 a month in retirement, and then you are financially secure. To me, that's not nearly enough, $3,500 a month. But that's what they say it is. And so what's sad, and I see a sickness out there, is all these individuals that are just not paying attention. They're not paying attention to their own money, and they stop saving, or they're not investing in things they understand. And so today, what I've seen and over the years, the people that can actually apply the things that I'm talking about today, that I'm sure other panelists today are talking about, where you can be hands-on with the type of investing you want to be doing, it will make all the difference. You're part of that 3 or 4% that are having success. So how do you have success? We got to avoid a few things. One of them is inflation. I'm not going to spend a lot of time on this. Obviously, we got to beat the bank. Bank, you can't leave your money at the bank. You're not going to keep up with inflation. Volatility. How do you avoid volatility? I think you just heard a presentation on one of the ways to avoid volatility. It really takes education. It takes taking a little bit of time and paying attention to your own money and following a system. But you got to avoid volatility. Just giving your money to somebody else in the stock market and saying, hey, show me that hypothetical rate of return. I hope I can hit that hypothetical rate of return. I can tell you, when I started first investing, I met with my financial advisor. I remember them saying, hey, look, hypothetically, if you start putting away $50 a month for the next 30 years, at an 11% rate, which is average, it's averaged that for the last 10 years, you're going to be a millionaire. Well, first of all, a millionaire doesn't do anything. Well, shouldn't say anything, but it's not enough for you. You can't retire with this $1 million. And number 2, the market's not yielding 11% if you just give it to your financial advisor. It's definitely not yielding that. So you have to avoid volatility. The third enemy after inflation and volatility is taxes. How do we avoid the taxes? Today's strategy is going to do just that. I'm going to show you how to be trading and doing the type of investments you want to be doing and do so while avoiding taxes. I'm going to transition here into a self-directed IRA and what that is. Some of you on this call already probably think that you know what a self-directed IRA is, and you might have heard of it. You might even have one, but I'm going to tell you 1 or 2 things a day that you probably had no idea that you can be doing inside of your self-directed IRA. These one or two things will make all the difference of what you're doing and how you're preparing and how you're making money inside your IRA. But for those of you, first of all, that don't know what a self-directed IRA is, it's just a descriptive word. It's not a legal term, but it's a self-directed IRA is an IRA that is established and administered by a custodian like myself, but also it is an IRA which allows you to invest in what you want. So you can invest in the stock market, and real estate, and businesses, and gold and coins. All the alternative assets as well as the traditional assets you can still invest in with a self-directed IRA. But the biggest difference is you can actually take advantage of is investing in what you want and what you understand without your financial advisor making a fee on it, and you investing in what you want. So you can actually set up a self-directed IRA if you already have a traditional or a Roth or a simple or an old 401k. Those actually can be transferred over tax-free into a self-directed IRA. Back up here, only 4%. Only 4% of Americans have a self-directed IRA that have an IRA. That's it. There's over 72 million IRA accounts in this country, and less than 4% of them have an IRA, self-directed IRA. Why do you think that is? Mostly because financial advisors aren't going to tell you about them. Why won't they tell you about them? They don't want you to invest in them, because if you move your money to self-directed IRA, they're not getting a fee. They're not getting the fee, so they're not going to educate you and teach you all about it. Therefore, that is the one major reason. The second reason is a lot of people just are unaware of it, don't understand it, because it's not as commonly used as the traditional go meet with a financial advisor and give them your money. So a self-directed IRA like ourselves, like Horizon Trust, we're a custodian. We are bonded, insured, and the funds that sit with us are FDIC insured, and we are regulated by the banking division. So we've been doing this for a long, long time. I've been in the trust company business for over 10 years. Horizon's been open for over 5 years, almost 6 years, helping thousands of individuals invest in the things they want and understand. I know this, I got to make a preface this, and I appreciate being on this call and being asked to be a panelist today. We've done 2 or 3 presentations for groups of individuals in the trading business, or at least trading experience. And the things that we've talked about and the gifts we've given away, I've seen a direct correlation. Within weeks of after doing the webinar and the call, I've seen literally 5 or 10% of the individuals that take advantage of this gift really make a difference and increase their returns by 2 or 3% per year, or avoid taxes completely on the investments they're doing in it. So it's a big deal. So how do you get in the 4% club? Well, obviously we gotta be better than inflation and also reduce volatility in the taxes. So I'm going to talk to you about profits. And so let me tell you first about a specific deal. I'm going to talk about a little bit more real estate. It doesn't have to be real estate, but in this case scenario, my first deal in real estate. My first deal in real estate, I flipped this property. It was a condo, $60,000. I had zero money, had no money to buy this property, but I had found an individual with an IRA. They moved over a portion of their IRA funds into a self-directed IRA and lent me the money. They lent me 100% of the money. I gave them title to the property, but I was still the owner. When I say title, they gave them first lien position on the property, but I was the owner of the property. So I fixed it and flipped it, made a profit, gave him 75% of the profits. He made a $12,000 return. I mean $12,000 profit, which is equivalent to an 18% rate of return, and he made that in 3 months. I made $4,000. I felt a little bit bummed because he made so much, but at the end of the day, this guy in his IRA made a $12,000 return, which is an 18% rate of return inside of his IRA. At the time, I could not get funding or financing from a bank. I was young, banks weren't going to lend me money, and I used someone else's IRA. I share this with you because in the beginning stages of my career, I didn't have an IRA, but I had access to someone who did. And so if there's ideas or things that you want to be doing or investing in, but you might not have enough money to do it, or you want to be trading, but you don't have the money, there's creative ways that our company can help you use other people's money to actually start trading or investing in real estate. This was a game changer for me, using other people's IRAs, leveraging that, having a relationship with them where I can actually start investing and making returns and splitting it, a portion of it, to the money partners. So this is how I kind of began. I only show this picture because it was one of like the 4th or 5th property I did, and I flipped this property, and after I bought it, I found this room full of cans, and I just think it's funny because people are like, man, you could have made so much money in recycling. And frankly, the better question is you should be asking is, why was I not invited to that party? Anyways, this was a property we flipped, made a good return on as well, but I did this with someone else's IRA funds. So I'm talking about IRAs. I'm going to transition here shortly into what people are doing inside of their IRA that's been so successful. But I want to make sure you understand anything that you're doing right now and that you're investing in right now, you can be doing inside of your IRA. And if you do so with a Roth, a self-directed Roth or a self-directed traditional account with us, you will avoid taxes. So you should be doing some of your investing and trading and real estate investing inside a retirement account so you can avoid the taxes. So this is nothing new. A self-directed IRA has been around for a long, long time. There's only a few things you can't do inside of a self-directed IRA. You can't buy arts, stamps, and rugs and antiques. You can't buy any of those things. But what you can buy is pretty much anything else. It just says you can't use those things. So you can invest in real estate. You just can't be investing in real estate where you actually live in it, or if it's a timeshare, or if it's a vacation property. It can be an investment only in real estate. So let me give you an example here of Tim Banks here. 40-year-old, he's got 25 years, from retirement, and he's got $45,000 in his Roth, and he wants to actively flip properties and trade in the stocks and buy different businesses. Let's say he wants to do all that, and he wants to pull out cash to flip some homes. So if he were to do those things, let's say he just put his $45,000 in the stock market. He put it in the stock market, and he earned a 17% rate of return, which kind of aggressive, but definitely doable. I know with a lot of these trading platforms, you can definitely do that. Over a 20-year period, at a 30% tax rate, his balance would go from $45,000 to $426,000. If he were to do that same thing inside of a self-directed IRA, over that same 20 years, his balance would be over $1 million. It's a $600,000 difference just by doing his trading inside of a self-directed IRA. If you do not have a self-directed IRA, you have to get one open. I'm going to give you a couple gifts at the end to actually help you if you haven't done it already. But this is one of the most critical paths, and you actually being part of the 4% when you go to retire and actually not outliving your retirement funds. So many individuals are outliving their retirement funds. I see it every single day because they're either leaving their money in CDs in the bank and they're not keeping up with inflation, or they're leaving it with their financial advisor and their financial advisor is not giving them attention and not helping them out. You care more about your money than anybody else. It's time that you start investing and putting it, all the things that you are comfortable doing it with inside a vehicle that the IRS has approved for you to do it, in which you do not have to pay taxes. This is a game changer. You can do it with inside a Roth, a traditional. You can move your money over if you already have some of it somewhere else. You can, if you have an IRA, let's say with Charles Schwab, and you want to just test this and move part of it into a self-directed IRA, you can actually have 2 or 3 IRAs as well. It does not matter. You're allowed to have as many as you want, but all you need is probably 1 or 2 different IRA accounts. Most of our clients test it out in a self-directed IRA vehicle with us with a portion of their funds, and after a year, they typically are moving it all over with us where we hold the asset. Now remember, a trust company like us, we hold the asset and we take your direction. You tell us where you want the funds to go, and then we will take your direction as long as it's not a prohibited transaction and send the funds to that investment or to that brokerage, and then you can then invest your funds and take advantage of avoiding taxes. This is a big deal. Look at this. It's a $600,000 difference. And this doesn't mean you're doing anything different but doing it inside of a tax-free environment. This is a game changer if you're not already doing it. So some people say, I make too much money to contribute to a Roth. That is not true. There's actually a vehicle in which allows you to open up a self-directed 401k that has a Roth bucket attached to it. Now that might sound like a mouthful. This subject of IRA, sometimes people get overwhelmed with, or it's boring. To me, it's probably the sexiest thing out there because one of the best ways of actually increasing your returns without doing anything different. You can open up a Roth if you make too much money. You'd have to do it through a self-directed 401k with a Roth bucket. What's awesome about that, in this example right here, not example, but in this stat, is you can actually put up to $55,000 a year into a 401k self-directed with a Roth bucket. This, for those of you that are in their late 40s, 50s, and 60s, you that are behind in retirement can start putting away more money today. If you have a business, you can open up a business with an LLC and open up a 401k. We at Horizon Trust Company can help you do that. We've had many, many individuals from calls like these and from these trading companies and different clients and customers who actually do this, who want to catch up. They're a little bit behind in the retirement savings. We help them get them all caught up, get them moving along, and get them saving way more money now, and do it in a vehicle which avoids taxes. Is there a limit on how much money you can make in your Roth? Absolutely not. After I opened up my IRA, after 2 years of flipping real estate, I was turning my IRA. I remember it started with $5,000. After my first deal, my $5,000 turned into $12,000. I made a $7,000 increase in my IRA in 60 days. That's over 100% rate of return inside of my IRA. And guess how much I paid in taxes? Nothing. And guess what? It was in a Roth self-directed IRA. And so guess what happens there? When I become the age of 59 and a half, although it seems far away at the time, but now it doesn't feel so far away after having 4 kids and getting a few gray hairs, it's not so far away. And when I pull my money out, I don't pay taxes on it because I'm making these big gains inside of my Roth IRA. Big, big game changer, guys. Huge game changer. You know, one of the reasons that people started talking a lot about this was back in the Romney days when Romney was running, and he built his IRA from 21 to 102 million dollars, investing in a lot of his own business, his own stocks. You can be doing the same thing and should be doing the same things. There's multiple ways. I just want to list a few of them in which people can use their self-directed IRAs. Again, as a custodian, as I am the owner of a custodian, it's our job to take direction and instruction from you, making sure it's not prohibited, making sure the documentation's in place, but then following your direction, investing in what you want, where you get to keep your gains. You guys, this is a big deal. If you think about it, some of you on your different trades or different financial advisor or brokerages, you're paying management fees, deferred loads and comps and ratio, all these different fees, and people don't realize it, but a lot of times you're paying 2, 3, 4% per year, even when your money is losing 10%. Or 5%, you're still paying the fees. When you have a self-directed IRA, the fees are much lower. In fact, they're less than 1% total. It's a big difference. You can be doing all these things inside of your self-directed IRA. I think I've already hit on this a little bit. Sometimes I get excited, I get ahead of myself in this when I give the webinars because I start talking about things that I get passionate about. But there's such a big difference if you start investing inside of a Roth or outside of a Roth. It's truly a difference of you having a few $100,000 in your account just by the investing that you're doing. So what else can you do inside of a self-directed 401k before I transition to the next subject? You can actually open up a self-directed 401k, and as you do so, one of the reasons why a lot of people do that is you can make larger contributions. I already talked about that. You can put up to $55,000 away in retirement, which is a huge difference maker for those needing catch up. There's some more flexibility and freedom, and you got some great opportunities to borrow monies. Many of you might not know this, but you can borrow up to 50% or $50,000 out of your IRA or 401k. So if you have not your IRA, but your 401k. So if you open up or you convert your IRA to a self-directed 401k with us, and let's say you have $50,000 in there, you can borrow up to $25,000 out of that $50,000 account because that's 50%. When I say borrow, you can take it out, pay it to anything. Pay it to yourself, pay it for vacation or for education and investing, whatever you want. And you have to pay yourself back within 5 years. When I say pay yourself back, you got to pay that loan back to your 401k, and you got to pay it at prime plus 2. So basically, you're going to end up paying 3, 4, 5% to borrow your own money, but you could pay off a 17% credit card, an 8% or 9% debt that you have. You can pay it off, then you can pay it back, your 401k, over 5 years. And guess who gets that prime plus 2? Guess who earns that 5%? You do. So it's essentially a tax-free loan that you're giving yourself. You're giving yourself a loan to do whatever you want with it. You're paying your 401k back, and the interest that you're earning on it, it stays inside of your 401k. It's an incredible way of borrowing and paying down high debt if you got it, without taking a penalty. A lot of people have these debts and they want to just take a penalty and pay the penalty and taxes out of 401k or IRA. That is not the right way of doing it, paying off taxes. Who can do these kind of accounts? Anybody who has the intent to make money. Real estate investors, sole proprietors, LLCs, anyone. Again, I talked about this in my first deal. But those individuals that who are looking to use other people's IRAs as well, it's very easy. And if you're trying to borrow money from a bank, it's so much harder. Using other people's IRAs and them explaining it, you create your own terms. For example, my first few deals, I paid 75% to the person who lent me the money for my real estate deals. After I had been doing it for over 2 years, the terms completely changed. It went from 75% to me paying them 50%, to me paying them 25% of the profits. Then I only paid them 8% annual rate of returns, which is actually still a great rate of return, beat the stock market. So I can assure you and tell you that using IRAs, there's over 72, actually the number's higher now, it's 76 million IRAs in the United States. These individuals should be and could be your bankers. Can you still trade in the stock market? Yes, you can still be doing the stock market trades inside of your self-directed IRA. We help many, many individuals move over their IRAs so they can avoid paying taxes where they typically are, so they can also invest in different alternatives and still maintain investing and trading in the stock market. It's absolutely a great idea. Protecting. Doing everything through your self-directed IRA, you will avoid all of this. I don't want to get into it because, frankly, taxes bore me. I can just tell you, if you're doing these things, investing inside your self-directed IRA, you can and should be avoiding all of these taxes. Everybody is doing it. How do you put money into an IRA? You either make a contribution or a rollover transfer. So it means if you don't have an IRA yet, you want to open up a self-directed IRA, it's a simple application process, and then you can actually write a check and contribute to your retirement account and then start investing. The other way is you can actually roll over or transfer funds from a current IRA or old 401k that you might have. If you have a retirement account and you're wanting to self-direct, you absolutely can do that. And you can roll those funds over, and you can do it in a tax-free environment and avoid them completely so you can start investing in your self-directed IRA. A lot of people will still take the lazy approach, meaning they self-direct their funds and then they still give their funds to other individuals. Again, like myself in the beginning of my career, you give it to someone, to me or somebody else, and they actually did all the work. So you still can have a very passive approach to your self-directing IRA. So self-directing is very easy. It's really you choosing which is right for you. Do you want to open up a self-directed IRA that's you pay on the seed, or you pay on the grow, on the crop? And so you decide. And what does that mean on the seed? You can either pay taxes and open up a Roth IRA now, which means you pay on taxes on the monies you put in, but then you don't pay any taxes on the growth and anything you take out. If you want to just have a traditional IRA, you get to take a tax write-off right now and not pay any monies on that. You get a deduction for anything that you put into your traditional IRA, and then you pay nothing while it grows, but when it comes out, you pay taxes on all of it. So really, it's for you to choose. We help you make that decision. We do a consultation. I'm going to give you a gift at the end. It's going to be a one-on-one consultation. That's part of our gift that I'm going to give you, but a lot more as well. You're going to get a consultation on what is the right account for you and which makes the sense based upon your age, your income, your tax brackets. So we will help you do that. By picking one of these two accounts, you're going to be able to lower your taxes, increase your profits, and grow your money much faster, and have a lot more protection, either with a traditional or Roth. That is the most two common accounts that are set up with us. The process when you self-direct is simple as well. As I close on this subject and move on to the next subject, you just open up an account, you fund it by making a contribution or transferring funds, and lastly, you start investing. That's it. It's 3 steps. It's very simple. We literally have hundreds of individuals every single month that open up new accounts with us, and we follow and we help them open up. We actually fill out the paperwork for them, help them move along, and start creating success in their retirement account. I already went over this. If you don't already understand the importance of investing inside your self-directed IRA and making these big gains inside of your IRA, then you missed the boat. This is something you've got to start doing if you're not already doing it. It is the difference you'd having an extra few $100,000 or over $1 million for you young ones on the call. But it's a huge, huge difference doing your investing inside of a self-directed IRA. Now I'm going to transition this a little bit here. I'm going to talk about what I've seen many, many individuals doing, and it's close and dear to my heart. One, because it's something I do on a daily basis, but it's also something that I had to use in my career. I had to use other people's money when I was in my real estate business. And as I started doing bigger deals, more and more individuals were lending me money from their IRAs for me to go out and do these different flips. Well, what I'd learned over my 15 years of investing, actually not 17 years of investing, is that not typically, always the banker, meaning the lender that was in first position, had security. They were on title, they had a lien on title, they had security in first position, and they always got paid first. They got paid first before my profits. And if there was no profits, they still got paid. They got paid their interest. I've learned the most passive way that people and individuals can create income in a secure way using their self-directed or just using the regular cash and living off of it without using a self-directed IRA. It's by using the banking concept. Banking concept I kind of started thinking about when I saw the sign years ago. It just reminded me of how banks work, right? Where banks are all excited. They give you 0.45% of your money when you open up an account. They think they're doing you a favor. Can't even keep up with inflation with that number. And then about 3 months later, you go back and you go to open up an account. You go to borrow money and they give you back your own money at 4.5%. And they're like, oh, you're getting such cheap money. Well, who's the winner there? The bank is really making a 4% arbitrage on your money and your neighbor's money. I learned a long time ago that I was going to become a bank. I was going to use my money to be a banker. Maybe not make the huge returns that I used to make, but I want to make a consistent, conservative, secure return. I now see literally thousands of individuals on an annual basis moving more and more into a secure position of what this is. This is called trust deed lending, mortgage lending. Some of you might have heard about this. This has been a game changer in a portfolio diversification thing for a lot of my trading people. I know there's a lot of traders on this call today, and I have seen this time and time again. Many individuals wanting to diversify their portfolio, put themselves in a position where they can actually invest in the stock market, but also create a passive strategy that has secure and consistent returns. That is mortgage lending. It's something that we teach. We've been doing for a long time. What a mortgage consists of is typically a loan amount, an interest rate, a term, and then some collateral. We're going to talk about that in this example right here. In this example right here, an individual says, hey, look, I want to borrow $45,000 on a property that's worth $86,000. Would you do that deal? If it's appraised and valued today at 86, would you lend 45,000? Yeah, I would do that in a first position. In that example, the loan amount's 86. The loan to value is almost 50%. It's about 60%. So it's less than 60% loan to value, which means if this property were to depreciate $20,000, my $45,000 investment would still be secure. Why? Because if this individual stopped making payments to me on a monthly basis, I could foreclose and take it back. Company that I'm a partner with, that's what we do. We teach individuals how to actually understand this, and then we do that for them. We do the due diligence, we gather the information, we provide the opportunities for you to look at, and then you, along with others, can be individual investors. For example, on this loan, you could be one of two investors. Each one of you could put up $22,500 and own 50% of this note. Or there could be four individuals that each put up $11,250, and each would be a proportionate of this loan secured on title. You could look up the Clark County or whatever county records in that city where the property is and see your name or your IRA name, because your IRA can invest in these as well, on the property. Guys, this is a nice little portfolio diversification for you individuals that are looking for passive income. Example here, 55-year-old, 53-year-old, 10 years from retirement, only has $350,000 in retirement, which seems pretty good in today's world, but it's not. They would outlive the retirement. They came to me and started investing in the mortgages and trust deeds. What happened? $350,000. They started putting. They said they could put away $13,000 and save that per year at a 9% interest rate. That's it. Nothing greater than 9% in this example. And that's pretty typical as well as what I see people doing when they're lending in the trust deed mortgage business. They would have over $1 million of retirement just with 10 years to grow. That's it. Just at a 9% rate of return. It's all about beating the market. If you can beat the market consistently, there might be 1 year where the stock market beats us. That's it. In general, we beat the market unless you're doing daily trades. When you're doing only daily and weekly, monthly trades, I definitely recommend it because I do my own trades as well. But a portion of your funds that you want to be more in a passive, consistent, outside of what you're doing in the trading market, you have to be and should be doing this. This will change the way you invest. If this individual, Charles and Mary Jones, when they go to retire with $1 million in their account, By the way, they're 2 years away from this. I know this is a real example. At 9%, if they were to earn 9% on their $1 million, that's $92,000 a year and over $7,500 a month. That's double what Social Security Administration says is financially secure. I believe $7,500 a month is financially secure. It's a lot more than $3,500, I can tell you that. In this case example, they stopped the bleeding. They stopped making, the 1% from the banks. They stopped the inflation issue they had. They stopped the volatility of the market going up and down where they had 15% rate of returns and -5 the next year. They stopped paying too much fees to their brokers. They took advantage of this. They started doing it all inside of their IRA, investing inside their IRA, and they now have almost over $1 million in retirement just by taking control and lending in the mortgage-driven business. Even when the real estate market dips, when you're in a first position, you are secure. You have an asset protecting your money. You're recorded on title. This is a game changer. So what I want to do is I have actually a video course on the banking subject, on lending in a first position. I sometimes again get ahead of myself. I'm going to go over a gift that I have for everyone here on this call, but I'm also going to answer some questions that commonly come up all the time regarding this banking and the self-directing space. So I want to leave some time for that. First, let me just say here, everyone must create this. I said the bank of you because if you are not a banker, meaning you can invest, and that's one of the questions I get all the time is, at what point can I start lending and being a banker and earning 7, 8, 9, 10% of my money? It only takes a minimum of $25,000. That's it. $25,000, you can become a lender. I thought at a young age I had to have $1 million or more to start being a lender. You don't. You can be one of many or multiple beneficiaries or lenders on a deal, lending on real estate, making consistent, safe, monthly rate of returns. We do this day in, day out. Been doing it for over 19 years. I'm going to give you a gift here. I want to just skip right over into this gift here. And Renee, then I'm going to just go to the most commonly asked questions here and jump into that. And sorry if I'm going a little bit fast or a little rushed. I get excited on these webinars, and so I get ahead of myself a little bit. But I want to jump into this because this is important. Everyone here on this call today with this mastermind group, I'm going to give this to, and I'm going to give you my information here in a second. But I'm going to give you, and you can look me up on Facebook or my website, gregherlean.com. This is the real deal. I do this for a living. I teach individuals and help them take control of their retirement funds. I'm going to give you a one-on-one consultation with my team, with my licensed professionals. I'm also going to give you a self-directed, self-made success get started guide. That's a tongue twister. I'm going to give you that guide. I'm going to email that to you. I'm going to give you my book called Bank on This. I'm also going to waive your setup fee. If you want to open up a self-directed IRA, typically it costs $200 to $300 setup one time with us, as well as an annual fee. And the annual fee ranges anywhere from 25 basis points to 70 basis points. Basis points, I mean 100 basis points means 1%, for those of you who aren't familiar with that. So for less than 1%, that's your annual fee. I'm going to waive your setup fee for those of you on this call today for this mastermind group. But you have to call in the next 5 days. Over the next 5 days, if you call in, take advantage of this gift. Say, I want my free book, I want my self-directed success guide, and I want my one-on-one consultation. We are not a big sales organization where we're going to try to do anything that you don't want to do. We want to help you, guide you, answer your questions, make sure you don't do anything prohibited, but get you taking advantage of avoiding volatility, avoiding inflation, or not necessarily avoiding it, but beating inflation, avoiding volatility, and also avoiding paying taxes. We're going to teach you how to do that and do it in a vehicle like a self-directed IRA. I'm going to give you all those gifts. So when you go here to gregherlean.com/inspiration, or you call in, if you call in, my staff's actually not working today, thankfully, but if you call in and leave a voicemail, we will call you back on Monday and set up that appointment. So if you go to gregherlean.com/inspiration or 888-226-6022, we will help you, give you this gift, give you the book, give you the manual, and help you on your way of avoiding paying taxes on the trades, on the different investments that you're doing right now. So if you don't mind, if there's any questions, obviously you can send them in. I got a couple and a lot of common ones as well that I'm going to just kind of go over here. And so again, here's the gift. You have my website. You got my Facebook as well. It's just my name, Greg Herlean. There's no other Greg Herleans out there. I've been doing this for 15 years. And I work underneath my brand, GregHerlean.com, because a lot of individuals want to know what I did and how I created success. I've lent over $1 billion in real estate. I've flipped all kinds of hotels, over 450 homes. I've had a lot of success in the stock market, funded 5 or 6 businesses, actually 6 businesses with my IRA. I just enjoy avoiding paying taxes and doing things in a tax-sheltered way. A self-directed vehicle has done that for me. I am a product of my own education. I do this on a daily basis and teach literally thousands of individuals of how to take advantage of this. So one of the questions I get all the time is fees. I already talked about that as far as an IRA goes. As far as the lending side goes, as far as the mortgage side goes, I partnered with a company called Capsule 6 years ago. They've been around for 20 years now. This is their 20th year. They focus primarily on teaching people the thing I talked about, getting monthly consistent returns. They get paid by a fee when they originate a loan. And so you get a fixed interest rate. That fixed rate, you know up front what you're going to make for that 1 to 2 year period. It's not a surprise. You're like, oh crap, I hope that the market's going to do good this month. No, you're going to get a fixed 6 or 7, 8, 9, or 10% return based upon the deal. You get to pick the deal, you get to choose the deal. You get an account specialist that actually will call you and talk to you about it. This is a game changer. This little thing, if it's a matter of 2%, I like to tell my investors, if you can make 2% more on your money per year for the next 10 or 20 years, it's a matter of a few $100,000 in retirement just by making 2% more than what you're currently doing today. I and my team will show you how to do that through avoiding taxes, through beating inflation, and avoiding volatility. It is what we do, and we do it very, very well. So, again, reaching out here, and Renee, I'm finishing probably 10 minutes earlier than you wanted. So I apologize for that, but you can go to gregherlean.com/inspiration or go to 888-226-6022 and get your gift there. I look forward to meeting you. I'll talk to you. I have no problem with that. I enjoy what I do, and this is a life and game changer for both you and your spouse or loved one and your kids. If there's no other questions, any questions here? I'm not sure if there is here, Renee. Looks like I might have covered them. Let's see. Yeah, I think that's it. I've got no other further questions. I appreciate you spending time with me today. Make sure if you want to get that gift, right here, the one-on-one consultation, the book, my book called Bank on This, I will send. You just call me and email me, and we'll get all our information. We send you out our package in our book, and look forward to seeing your successes. Thank you for this time. Again, it's not too late to start self-directing. It's not too late to become your own banker. We'll teach you how to become a banker and create consistent, secure monthly checks into your personal bank account where it's direct deposited or into your IRA where you avoid paying taxes. Thanks again. Have a great Saturday and enjoy the rest of the day here at the Mastermind.